So the reason that getting D&O and professional liability insurance policies prepared for a change in control, including a restructuring or a bankruptcy process, is to allow a couple of things to happen. Number one, as far as D&O insurance goes, one of the real concerns is that it provides protection to a bunch of different constituents. So one are the directors and officers themselves, and it can be done on a direct basis under what's called Side A coverage. Secondly, the reimbursement or indemnification of those Ds and Os for litigation or claims against them. And number three, for the entity itself. And so one of the real concerns is that whether that policy is going to be, while it's providing defense and indemnity to all three of these potentially different constituents, if that policy through a bankruptcy process in particular ends up as part of the estate, there may be real concern about whether those funds are going to be available for the Ds and Os in particular. So think about the existing Ds and Os at the time of the change of control, the restructuring, or the bankruptcy. They're going to want to make sure that they've got protection while they're remaining in place until new management is brought in, as well as for things that occurred in the past. The bankruptcy trustee and the creditors are going to want to make sure that the entity itself has protection under existing policies. And then, of course, to get the deal done, the new management coming in, the new directors and officers, are also going to want to be protected. So the critical thing is to plan ahead. It's to make sure that if there are provisions that happen automatically on a change of control, that a discussion takes place with the insurer to try to amend that policy, or when the policy is first written or placed, to have one that's going to be effectively bankruptcy or restructuring proof, so that you're going to have protection for all of these different constituencies.